Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of July 14th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was a good week for Maryland mortgage rates. They did actually move lower. If you take a look at the bond chart on the screen, you can see that previously we had a downward trend on the mortgage bond with the red candles. You see the arrow down. But then July 3rd, when the jobs report came out, we hit a level of support. You can see that with that hammer pattern. So that's why we recommended last Monday that you start the week floating, because we thought mortgage bonds could rally off of that if we got a green candle on Monday. And right there on Monday, got the green candle. Mortgage bonds then rallied off that positive trading signal all week long. So the trend now is for mortgage bonds to move higher. That moves Maryland mortgage rates lower. So with that in mind, we had a green candle on Friday to continue the trend. We're going to recommend floating your Maryland mortgage rate to start the week, see if the bond can continue this rally. Now, if it switches, we get a sell-off, we'll let you know to switch to locking. But right now, good idea to float your Maryland mortgage rate, see if you can pick up a slightly lower rate. Now, if you dig into it, we had a big report last week. The Federal Open Market Committee met on Wednesday, and they released their minutes of the meeting and basically said they are continuing their asset purchase program, continue to taper that, which is QE3. So they've been tapering at $10 billion every time they've met since the beginning of the year. We were at $85 billion at the start of the year. They're planning on being done by October. So they've got another meeting in July. They're going to cut $10 billion, they said. Then they're meeting in September. They're going to cut $10 billion. And then they're meeting in October. They're going to cut $15 billion, down to zero, be done with the program. So that's what they've been saying. Now, that may lead them to raise the short-term interest rates sooner rather than later when they're done the program, but we'll have to watch out for that. But what does this mean for mortgage rates? Well, it could actually be good news for mortgage rates. That may mean mortgage rates do end the year relatively low, because if you look at the chart on the screen, every time the Feds have ended their asset purchase program, starting with QE1, the stock market has sold off. So if you look there, QE1 ended the program, stock market sold off, negative 13.2% decline over a 3-month period. Then they announced QE2, and before they even started, that actually rallied the stock market. Stock market rallies, QE2 is terminated, stock market sells off, 17.9% decline. QE3 kicks in, stock market's been on a rally ever since QE3 kicked in. Now, QE3 is ending October. What does that mean? Well, if the trend follows, stock market will probably sell off, big correction because we've been on a big rally, and that money would move into bonds. That would help mortgage rates. We may actually see mortgage rates stay low throughout the year because of this ending of the asset purchase program. So we'll have to keep on the lookout for that. And then Thursday, we had the weekly initial jobless claim come out. It actually dropped 11,000 claims down to 304,000 claims. If you look at the chart on the screen, you can see that jobless claims have been holding steady in the low 300,000s all the way back to April. We've been in the low 300,000s. That's a good sign for the labor market. So we'll have to see if that continues to hold. And then in housing news, CoreLogic released their national foreclosure report for May 2014. Very good report. Completed foreclosures dropped 37% from the previous year. They were at 52,000 completed foreclosures May 2013, dropped to 47,000 for May 2014. And that just goes to show that home price appreciation will solve most of the real estate problem, because if home prices go up, people can sell rather than get foreclosed on, or it gives them incentive to get current on their mortgage and start paying again, because now they may have some equity in the home. So home price appreciations have been, since 2012, have been helping the real estate market and stopping the foreclosures. So that's good news there. Now, in the local news, the next free first-time homebuyer seminar is coming up this Saturday, July 19th in Laurel, Maryland. That's from 10 a.m. to noon. And then we've got one coming up the following Saturday on July 26th. That'll be in Towson, Maryland, right there on Delaney Road at the Sheraton Baltimore North Hotel. Again, 10 a.m. to noon. And then the next one in Frederick, Maryland is August 9th. That's a Saturday, 10 a.m. to noon at the Holiday Inn Conference Center right there in Frederick, Maryland. Now, you can register for either one of these events by giving us a call at 410-412-3319 or online, www.marylandhomebuyerseminars.com. Hopefully you can make one of those dates. Definitely a great experience. It gives you a whole education on home buying A to Z. I look forward to seeing you guys next week.